Hey everyone, Value Add Mike here today to discuss how we got to write off $1 million in the first year of holding our property. For those who don't know, my name is Mike Taravella, Value Add Mike, and me and my business partners have closed over $65 million in commercial real estate, specifically in the multifamily sector. And today I wanted to give you one tip to help you write off a lot on your taxes. Obviously, see a CPA and a real estate professional to help go through this. But when purchasing commercial real estate, the IRS allows you to do a cost segregation study. And a cost segregation study is a very amazing, sexy study that we all would love to know and understand, but don't need to. Because what it is a company goes out and does an accounting and engineering study. And what they do is they're looking to depreciate. Instead of the IRS depreciating year over year the same amount, what you get to do with this study is front load all of that depreciation. So generally the IRS, as of now, depreciates a property over 27 and a half years. However, what the study does allows you to depreciate chairs, equipment, a lot of the things in the first couple years so that you get to write off a lot more of your assets at the beginning versus the end of the life of your property. So what does that mean for you as an investor? So when we purchased our 36 unit last year in July 2021, it cost us $1.4 million in equity to have closing costs, working capital, renovation budgets, just to make sure we can operate the property. However, with our cost segregation study, it ranges generally around $3,000 to $5,000 depending on who you use. But what it allowed us to do was depreciate over $1 million in that first year of holding the property. And so when doing our taxes, we were paying out cash flow to our investors and making sure that they get to keep it by having this cost segregation study. And so literally all of the cash flow our investors got to keep, and it really allowed us to maintain the cash flow of the property, but also write off $1 million. So if you're a real estate professional, there's a lot of rules, and I would really make sure when discussing depreciation, talk to your CPA, make sure they have an understanding, make sure they know the rules, and make sure that you follow and abide by the real estate professional rules and track your hours, because there's a lot of specific rules, and every CPA has their own premise on it. It's not always black and white, so just making sure that your CPA understands and is involved in the process early on to help you later in the year, especially when it comes to taxes. So, cost segregation, we got to write off $1 million to our investors so they can earn the cash flow, but there's a lot of nuance with that rules, and make sure your CPA is involved and understands. So if you got any value, please like, comment, and subscribe to the channel. If you want our investor updates, click the link in the description. And until then, we'll see you next time.